Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to this week's Top Stock Picks of the Week. I'm Tracy Brynick, and I'm joined this week by Nina Mishra. And we've brought you two very different Zacks #1 rank strong buy stocks. Mine is a chemical company, and Nina's is one of the world's best retailers, is how I would describe it. But let's start off with my stock. So I brought a chemical company. You may think, oh, that's kind of boring, Tracy, but they produce lithium, and lithium used in your computer, in your phone, and more importantly, in your electric vehicle. Yes, it goes into the batteries, so demand is high. And the company I'm talking about, Albemarle, ticker ALB. Again, you may never have heard of it, but it's got an interesting dynamic. It's one of the few companies outside of the energy industry that has raised not just once, but twice its earnings this year alone. What is going on with its earnings? Why is it so hot? Let's dive right in and take a closer look. So here's what the sales and earnings estimates look like. So you can see the sales estimate there for the current year up at 125%. This is a result of the lithium prices rising, and Albemarle has been able to renegotiate some of its other contracts to get those higher prices. So revenue is soaring. In the second quarter, sales were up 91% to 1.5 billion. And then you can see what's kind of happening with the earnings estimates for this year. Expected to be up 425%. Yes, 425% from 404 to 2124. And as I said, it's one of the few companies that is raising estimates several times. If we scroll down, you can see the bullishness of the analysts. Of course, they're going to raise when the company is raising, and these are not small raises. I mean, it's big increases. You can see coming down here, we were at $13 just 30 days ago, now at the $21, because that is literally the range that the company has raised it for. Now, Albemarle it is in the United States, actually, headquartered in Charlotte, but it has operations around the world. It's in Western Australia. It's in Chile, which has big lithium mines there in Chile. It's in North Carolina, where it's headquartered, and it is also in China. So it's got a lot going on, but this is the time, because of the lithium demand, to maybe want to be in a company like this. PE is just 12.7 because of this amazing rise in the earnings estimates here. And you can see next year a little more muted, but they're even bullish on next year with a gain of almost 15% again. Now, what does this look like on the chart? This is one of the craziest charts I've seen on the price and consensus, just kind of steadily going, and expected to see the gains here in 2022 and 2023. But then lithium prices have exploded higher, and you can see the result. So it's pretty crazy. You can also see the result in the actual share price. Everyone was anticipating rising lithium prices. I mean, as we get more electric cars, the demand is going to increase. They cannot meet the demand. So it's just supply demand dynamics here. And so everybody was bidding up these shares already as of, the pandemic year. They're up about 200% over the last 2 years, but this year only up about 15%. And you can see it very choppy and kind of crazy there in 2020. It's been a wild ride in 2020. You have to have strong stomach to stick this one out. But it's back up towards the high from 2021. Will we get a breakout here or not? I also brought the earnings surprise chart because I wanted to show just what this company has been doing. It has been managing expectations well, and only that one miss right around when the pandemic was hitting there in 2020. So it's got a handle on what is happening with these earnings. Also, because of the tremendous revenue growth that was not really expected, they do expect to be free cash flow positive here in 2022. They haven't been because they're investing a lot in the business, in the CapEx for these mines. It's a heavily, cash heavy business. So they're expecting to spend on CapEx 1.3 to 1.5 billion this year, but net cash from operations now expected to be 1.4 to 1.7 thanks to these rising prices. So finally going to be free cash flow positive. They do pay a dividend already, yielding 0.6%. But I don't know what else they're going to do with this extra cash. We'll see how many quarters it lasts for, that kind of thing. It's much like an energy company in that way. This is the time to be in these lithium stocks. So Albemarle ALB is one of the top ones, Zacks #1 rank. Go check it out. I own it in the Zacks Insider Trader because some insiders have been buying over the last year or so. So they've been diving in knowing that the lithium prices are surging. So keep this one in mind, but you also might want to check out Nina's top stock pick of the week because, as I said, it's one of the top retailers out there. Nothing seems to be stopping it, and she's going to tell you more.
Thanks, Tracy. I'm Nina Mishra, and my top pick today is Costco, ticker symbol COST, Cost. And we all know that Costco is one of the largest warehouse club operators in the United States. And they sell everything from groceries, food, other household products, appliances, furniture, even clothing. And Costco stock, it is a consumer defensive stock, so it has done quite well compared to the broader market this year. This has provided the kind of refuge that investors look for in consumer defensive stocks. In fact, the stock is up a little bit for the year. It has managed to stay in the green. So from the recent retail earnings report, we have seen that the US consumer has remained quite resilient so far, but their spending preferences have shifted. They are no longer spending on discretionary items like electronics or furniture, but they're still buying food and they're still buying gasoline. And we know that Costco is well known for its cheap gasoline prices and some cheap food prices also. And their groceries and other food products are also very competitively priced. So in this environment of rising inflation, consumers are still going to places like Costco to buy gas and food items, and that benefits Costco stock. And since Costco has significant moat because of their big presence in the market, so they are able to operate with very thin margins, and they are also able to manage the supply chain issues better than other retail stocks. Now, that is one of the reasons why the stock has done quite well. Now, let's go to Zacks.com quote page for Costco, and I wanted to show you some charts. So, Costco is currently a Zacks rank 2 buy ranked stock. It is safe for value because you will see it is trading at a forward P multiple of about 42. It is not cheap. It is investors are willing to pay that kind of premium for the kind of refuge this stock has provided to investors. But excellent growth potential, which is reflected by A. F for momentum is not surprising because the market has been so volatile and stocks have faced a lot of challenges. B for VGM. Now, Costco reported excellent results for their recent quarter, and that is why you will see that analysts have been raising their estimates. As analysts have raised their estimates for the stock for the current year as well as the next year. Now, the company doesn't report until next month. They will be reporting in September, so the earnings are about just about a month away. But looking at the longer term price consensus and EPS price chart, you will see that they have been able to deliver consistent earning beats for the last 5 quarters. And even looking at the longer term price consensus and EPS price chart, which this chart is, they have been 4 occasions, 4 quarters where they missed. Otherwise, they have consistently beaten our earnings estimates. So given Costco's impressive moat and the kind of product offering and the ability to manage the supply chain challenges, the stock, Zacks Buyer stock, is worth a look. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer, and also make sure to subscribe to our videos so that you do not miss anything. And we will see you next week.